Hey guys, RC Peck here. I'm doing my Monday 10 a.m. weekly live. So I want to do this live. I want to show symbols that I've not done an immense amount of work on because I want you to kind of see and hear how I'm thinking out loud when looking at sectors or looking at symbols within sectors. And I want to talk about real estate today because it is absolutely booming. People in their early 30s or first-time homebuyers are having such a hard time buying a house. There are, I think I saw an article with 76 offers on a house. So there is a lot going on with real estate. I want to jump over to the price charts. One thing I want to say about real estate is people often believe that real estate, because it's a completely separate asset class, has a completely different movement to the stock market. And I think that was probably true maybe 40 years ago. But if you've noticed, or if you start looking at price charts with real estate in the stock market, they actually go together. As people are getting richer in the stock market, real estate goes higher, or real estate is moving in tandem with interest rates. So we are taught that these assets always have to be independent, and by diversifying, you're changing kind of the risk profile or the highs and lows. But as we move more and more into the 21st century, I see actually less of that happening. So let me jump over to the price charts. And let's just talk about the different sectors you could use to participate in real estate. Now, I'm not talking about buying an actual piece of property or a twoplex or threeplex. I said twoplex, duplex, threeplex, multifamily homes, individual home, just using symbols, using ticker symbols. And so I wanted to look at four sectors or subsectors. Now, if you guys have a question, you can just go ahead and put it into the question. If you have a real estate symbol you want me to look at, if I have time, I will jump over to it. So what you're looking at here on the screen, let me just get as much real estate as we can on the screen here. So what we're looking at is four. We have home builders, XHB. We have real estate, XLRE, which actually got pulled out of financials. We have materials, XLB, and we have REITs, mortgage REITs, REM. And so those are the four colored lines on here. The red one is XHB. So this is what S&P thinks is part of the home builders index. Right below it, we have mortgages, mortgage REITs. What's that, violet? Below that, we have materials. And then down here in a distant fourth is actually XLRE. So right away, just looking at this performance chart, and it kind of defaults to 200. So I dragged it back to the COVID bottom. We could bring it to the beginning of the year and we could see how it looks differently. But just at this frame with a major bottom, which was the COVID bottom in March of 2020, we can see from that bottom, the home builders index has outperformed the real estate index and the materials index, and at least the mortgage REIT index. So that's interesting. So that's the red one, right? So there's no someone telling you, no, you actually need to be in materials, or you actually need to be in this one, or you actually need to be in that one. When you get trained to look at price charts, you can see what is going on, not what someone is telling you is going on. So I just set this up before we started this, and I just wanted to kind of peer into this red line, and I want to see what their biggest holdings were. And so I went over to ETF DB, that's ETF database. Let me just click over to it right here. And then I pulled over the I pulled over the 10 biggest holdings for it. So look at this. This is pretty interesting. It's actually a retail store that's doing best in home builders. It's Restoration Hardware. Williams-Sonoma is right. I believe that's Williams-Sonoma right there. So this is interesting, right? With home builders, it's actually retail that's doing well. Now, the second two, you can see are DR Horton and Pulte. But I thought this was interesting that what's actually best performing is retail, which then you can go, maybe I should do home builder retail. And you might only know about Home Depot, or you might only know about Lowe's. So this is really interesting in a very, what did that take us? Moments, 2 minutes to do that, to figure out, okay, of real estate, it's the home builder index that's doing well. What in home builder index is doing the best? And it's actually retail stores that specialize in home builders, with RH, Restoration Hardware, just crushing everything else. And here it is from the beginning of the year to where it is today. It's up about 56%. where it had a really nice consolidation here after it broke above its COVID peak, which was right there. That was the February. And then it had a little just a little bit of hesitation, right? And then it moved higher from there. So this is absolutely moving higher. It's $15 billion market cap. It could go much higher from that. I'm just super curious if there's any past. No, so there's no past all-time highs. It got hit incredibly hard in the 15-16 correction when it fell. Look at that, guys. It fell 76%. Super interesting. But that's Restoration Hardware. It's got a little bit of correction here. Certainly a break above $717 is a sign that more buyers are coming in. But also Williams-Sonoma. And this one was really off my... It wasn't even on my radar, but check this out. Very similar looking to Restoration Hardware. But here from the beginning of the year to where it is today, it's up about 70%. So this is actually performing, Williams-Sonoma is performing better than Restoration Hardware. They're about the same market cap. Williams-Sonoma is about $13 billion. Restoration Hardware is about $15 billion. And let me just zoom back and see in the past, right? Because what we want to see is there any past resistance that it might hit up against where sellers might be hiding? But I don't see any zooming out 10 years. Don't know how long Williams-Sonoma has been public, at least 20 years. I'm going to guess that there are no old lifetime highs in front of it. There it was right there. Look at this hesitation right before COVID took the market down 35%. And that was its old lifetime high. So we have two retail stores that are focused on home building that are absolutely crushing it. As far as where you may want the buy to be, I'm just looking over at my other screen here, where you may want the buy to be, I'd want to see it break above this, kind of this 185. There's some consolidation in here. If it dropped down here to 165, that would also be interesting to me because buyers have come in. And one of the things I train people to do in my trading course is to systematize as much as you can, right? You want to systematize so you don't have to be checking Williams-Sonoma. You can just send an alert. So if Williams-Sonoma hits 165 and go, hey, you know what? That's my bottom of the range buy. Or if Williams-Sonoma hits 187, that's the top range of my buy. And it can give you this kind of this peace of mind so you don't have to track it all the time. Because one of the things that I see that really hurts investors and traders is they're unnecessarily checking their positions and it's not actually making their money grow better. Okay, the other part of the Home Builder Index was the actual companies building homes. And actually, let me just quickly look at Home Depot because HD, let's just see how it looks. Yeah, look, just broke out to new highs, guys. That's a definite buy right there. When you have, and we can zoom back and see, but had a consolidation here with Home Depot. Look at this false breakout here. It broke below here, right? It got people to sell. That's called a false breakout. That definitely kicked people out. And then when it came back into the range, it went up 26%. And now here it is breaking up and out. Very likely we're going to see Williams-Sonoma and Restoration Hardware do the same thing. Now, I don't know the revenue. I don't know the profit. That's not the purpose of looking at these charts and these reviews, but Home Depot is at $355 billion market cap. And this thing is absolutely moving higher. I just want to quickly check Walmart because that is at, okay, $400 billion. So Home Depot is going to surpass Walmart. And if someone said Walmart or Home Depot, man, I'm taking Home Depot all day long. Let me just quickly look at Lowe. Lowe is half the size, less than half the size of Home Depot. But man, I would take Home Depot over Lowe's, and I'd actually take it over Walmart too. So we've got home builder retail that's absolutely moving. Now let's just quickly look at the home builders themselves. Here's D.R. Horton, $36 billion company. Let's just see what this is up for the year. Up 50%. So still impressive. It's a little over twice the size of Restoration Hardware and Williams-Sonoma. But look at that. And it's a little bit of consolidation right here. Now this is interesting. This had a much different consolidation than Home Depot. See there, it broke above, I'm looking at this right now, broke above this consolidation, came back inside the consolidation, but didn't break down. You should expect that. That's one thing I teach my trading students, that once something breaks out of consolidation, it doesn't just mean it's going to break and take off. That happens sometimes. But expect it to come back in and kind of test the waters a little bit, see if more buyers came in. And it did. It tested it twice, double here, and then it moved up. So that is not unusual to see. But if you're not taught how to understand these things, you're going to make unnecessary trades in and out, and it's going to end up hurting. Now, Toll Brothers is a fraction the size of D.R. Horton. It had its consolidation right where the pre-COVID peak was and the trade wars peak. So this is definitely underperforming D.R. Horton. Finally broke out. I'm just curious, how does this look in the past? Let's just look over here. Yeah, but it definitely had this breakout here and it's moving higher. But DH, and we saw this here, DH is there. Let's do this. Let's look at it this way. There's a histogram. It's easier to see the price chart. So I was looking at D.R. Horton, the green here, and saying it was the best home builder. But actually, for this time period, and this time period is COVID bottom, it's actually Toll Brothers that's outperformed over that time period. I just want to look at one more. Let's look at Pulte here. And what is this symbol? PHM. Let's look at PHM, guys. PHM. Yeah, popping out. Let's actually, we are super zoomed out here. But check this out. So here, Pulte is broken out to a new lifetime high. Pulte in market sizes between Toll Brothers and D.R. Horton, right? It's just about middle from a market cap point of view, and it's breaking out. So we have XAB, XHB being the strongest way right now to play real estate. It's beating REITs, it's beating materials, it's beating the real estate sector itself. And then as we looked in, we've got both retail home builder breaking out, and we have the home builders themselves breaking out. That's what you want, guys. That's what we're looking for. We're looking for, hold on, I just clicked something on my other screen and it didn't do what I thought it was supposed to do. This is what we want to do, whether we're an investor and a trader, and there's a big difference between them. But what we want to do is we want to find symbols that people are buying. We want to find symbols that are breaking out. We want to find symbols that are moving higher. And what I did today was just, I looked at a sector. Real estate's been in the news a lot. I wanted to go right to symbols. I looked at 4 ways to measure real estate. Right away, I found the strongest symbol that's measuring real estate, Home Builders Index, XHB. Almost immediately, we saw retail home builders were actually beating everything. And then we looked at the actual strongest home builders. So we want to find the strength. We want to buy the strength. Finding the symbols. People often believe finding the symbols is the difficult part, but actually it's not. Finding the symbols is actually quite simple. I did it here in just a few minutes. It's knowing how to enter. It's knowing how much to put into the position. It's knowing if you should add to the position when it moves higher. It's knowing when you should get out. It's knowing when the target gets hit. So there's parts to this recipe. And I want to point this out because people are often taught it's all about the symbol. It's all about the symbol. Yes, you've got to have the right symbol. But that's the easy part. And then everything else is how do you manage those things? That's the next big step. And then after that is everything that goes on in your brain. The feelings, the emotions, the behavior, because that's what's going to pull the temple down on you. I am wearing a tie today. I'm actually going to be on TD Ameritrade's network in a little bit. And so I always like to dress up a little bit for that. So that's why the tie is on. Thanks, guys, for being here. If you like this, you're going to love my free course called Clarity and Control. 2 things people have told me over the last 23 years that they want more of in their financial life. They want clarity. They want to know they're going to be okay. And they want that control back over their money. So check it out in the description. Appreciate you guys being in my world. I'm going to hit the pause button now. And if you have a sector or a symbol or a type you want me to dig into on one of these live calls, you can just leave it in the comments. Until then, I will speak to you guys on the next live one, and I'll see you guys on my next videos. Okay.